Good evening, guys. It is now Saturday, 12:22 a.m. I got out of work not too long ago. Got showered, made myself look presentable. But before we start, February 5th was Go Red for Women. And what happens is it's also called National Wear Red Day. And what it's about is you wear red to support and bring awareness to heart disease in women. And there's a major fundraiser going on at goredforwomen.org. If you guys are interested, definitely go look it up. You might learn a thing or two. All right. So shout out to all the ladies. Without further ado, let's get to the topic at hand. This is the follow-up on the first video that I posted about general investing. I'll dive a little bit deeper tonight. I'm just going to answer a couple of questions that periodically pop up through messages from various friends and just people that are interested, I guess, in seeing how they can have their money work for them. So, before we get deeper into this, once again, I have to reiterate, I am not a licensed professional. I'm not here to give you advice. I'm not here to advice in terms of what exactly to invest in. I'm not going to go and be like, yeah, buy Apple. And then just leave it at that. No. If I was to say something like that, I'd tell you exactly why I would buy Apple. So let's get to the first question. Friends 429 asks, what are your investment strategies? Now, there's a broad range of strategies. I don't really subscribe to a particular theory, but one thing I do believe in is that you cannot time the market perfectly. There's no such thing. There's a lot of people out there that subscribe to this, and no, that's not me. My strategies are very, I don't even know how to describe it, to be honest with you. I look at trends, but I think the most important part is if you look at trends, you're obviously looking for an uptick. Why is there an uptick in certain companies? Why is there certain interest? Why do you see more volume going here as opposed to there? That's probably the most important part, at least from my experience. You got to be versatile in terms of not exactly knowing when to get in and get out. It's more like understanding the factors that are going to come into play. So, for example, I'll go back to, when things started locking down last year. Let's just say in March, when we were pretty much in the full swing of the pandemic, where states were pretty much telling everyone to stay home, right? That's literally what that was. Now that, in my head, that triggered something. As soon as I started noticing things were starting to close, I was like, all right, this means that people are going to be home. People are going to be working from home. Guess what? That's when you start. This is one of those factors. You notice that people are going to stay home more and do more work at home. What does that mean? Jump into things that obviously facilitate those things, such as Zoom, such as Microsoft, because Microsoft with their Teams, such as Google. People are going to be home probably watching YouTube for instructional videos on DIY projects, or just trying to educate themselves, such as maybe some of you are right now by watching this. And by the way, thank you to the one viewer for watching the video last week. Thank you. These are the things you got to watch out for. let's say, we're we're going to war tomorrow. What does that mean? You buy defense stocks, pretty much, right? You definitely want to check on the price of oil, see how that's impacted. Things like that. Um, when you see governments pass initiatives, let's say, like when the government passes the initiative to be greener and focus more on renewable energy, what does that tell you? You're probably going to look into stocks like solar solar stocks. You're going to look at things like electric vehicle plays. And this is one of the cool things, actually. So a lot of times I'll talk to people and people will be like, "Oh, how's Tesla? What do you think? Do you honestly believe in this company?" Well, if me and my family didn't believe in this company, we wouldn't have bought a Tesla. Let's be honest here. And it goes back to the first video. If you believe in something, you got to be able to sell it, and don't be fake. Don't lie about it. This is not a pump and I'm not here to like preach pump and dump and all these other like shady tactics. I don't follow Reddit. I don't. That's an entirely other subject right there. I'm not even gonna bother to address that. If you want to go ahead, by all means, go ahead. That's your money. Use it the way you see fit. I'm not here to like tell you how to spend your money. I'm just here to share with you my experiences and my perspectives. So going back to investment strategies, just be mindful of your surroundings. Be mindful of the climate. Be mindful of the sentiment. This is kind of stupid, but be mindful of momentum. Momentum is huge nowadays, especially now that we have the rise of they call it retail investor. To be honest with you, no offense, I call them casuals. Oftentimes they're not very educated. No offense. But you also don't have to be educated. That's the thing. Sometimes I feel like this is common sense. Maybe it's just from all the years of schooling that I've done in these particular subjects, where I feel like it's common sense. But I feel like it's not anymore anyway. And I don't know why. Like, I thought it would be common sense to save money. I thought it was common sense to prioritize how you spend your money. Again, I'm not telling you how to spend your money, but if you go out and buy a pair of Air Force Ones and spend $120 on a pair of sneakers in the middle of the month, and then ask me, "Damn, Teddy, I'm short $120 for rent," I'm gonna say, why'd you buy a pair of Air Force Ones 2 weeks ago? Why'd you buy that video game 2 weeks ago? Responsible spending, guys. Come on, we're adults here. If you want to talk to me about investing, be an adult. Prioritize how you spend your money, because if you're gonna jump right into it, you have to be responsible about your finances, guys. That's just plain and simple. I don't want to see you lose everything. Like, this is one of the major rules. That's right, I should talk about this. People often ask, "Oh, how much should I invest?" I'm like, I don't even know where to begin to answer this question. So I answer it very generally and very truthfully, might I add. Invest what you are willing to lose, because there is no guarantee in this. See, I call it's not a game, but I call it a game, okay? So just be responsible. Don't leverage yourself to the point where you can't pay rent. Don't leverage yourself to the point where you can't pay your bills. Don't bet the house on it. Like, come on, that's not... Be adults, guys, please. Because, like I said, there's no guarantee. there are things that are very close to being guarantees in the market. Don't get me wrong, but nothing's 100%. So please be responsible, guys. Let's go to the next question. Another popular one all the time. What app do you use? Now, I'm not going to sit here and tell you about the things that are going on with Robinhood and how they're pretty much stretched right now. Very, very thin, might I add, due to the retail investor. But no, I don't use Robinhood. I don't use Acorns. I don't use any of these free apps because one thing my grandmother taught me when I was probably about 5 or 6 years old, there's no such thing as a free lunch. There's never such thing as a free lunch. There is always an opportunity cost. If you've taken any economics classes in your life, you will learn that there is an opportunity cost to everything. Nothing's free, guys. But what app do I use? I use TD Ameritrade. They've been around for a while. They know what they're doing. The platform is strong. The customer service is great. I have my own, I won't call her my own advisor, but I have a direct line to reach her if I have any questions regarding the account. I cannot be more satisfied with the product, to be honest with you. The ease of use, the execution of transactions, it's all pretty on point. I have no major complaints. Whether you start with $1,000 or $500, I'd go there, to be honest with you. When it comes to money, don't be attracted to these free apps so quickly because there's always a cost. Remember, in today's day and age, you are the product now. You know, don't go thinking that you're using their product. It's a symbiotic relationship at this point in today's world. We are the product. We're being sold, literally, left and right. You want to use those free apps? Go right ahead. Guess what? They are selling your information. It's just that simple. Because, again, let's reiterate that. There is no free lunch, guys. So be careful. There is just, you know how we're always so quick to click, I agree. Yeah, there's, read into it. It might shock you guys. So yes, TD Ameritrade. I'm not being paid. I'm not being sponsored, but they haven't done me wrong yet. Another popular question is, what news sources or references do you utilize? I'm pretty damn busy, guys. I know some of you out there that are trading, you literally, this is you all day. This is you all day. I don't have that time, guys. You know, I'll be straight up. If I was to trade and not be confined to the shop for such long stretches of every day, there's a pretty decent likelihood I could probably make more doing that. But I love the people and I love the community, which is why I invest. I'm not trading. Big difference. You know, sitting there doing this all day, you know, buying and selling multiple times a day. No offense, that's not investing, bro. That's trading. Big difference. I'm in it for the long game. You guys are out there hitting singles. You might hit a home run here and there, but I'm hitting home runs on the regular, on the long term. I'm doing this for retirement. I'm not doing this to make $1,000 this week. I'm doing this so that I don't have to struggle as hard when I get older in life. Because that's what responsible adulting is. That's how you make your money work for you. What news sources? And I've said this numerous times to people. I literally have CNBC playing Monday to Friday, pretty much all day, as soon as I get to the shop until about 7 p.m. Like when they start playing Shark Tank, I'm like, it's over. I'm not even, and you guys see me at the shop. You don't see me standing in front of the TV doing this all day when I'm there. It's playing in the background. I'm sure you guys hear it. But I will hear little things here and there. And, I'm not a fan of the guy. While he is entertaining, a good starting point is definitely, and I've said this to you so many people, so many times, and I hope you guys have actually started. But CNBC, Mad Money, 6 p.m. I think, Monday to Friday? Watch that. And then from 5 to 6, they have, Options Trader or something or whatever. Just watch those shows. Like, if you're home all day and you seriously want to learn, just watch CNBC all day. You're going to learn so much about it. And by watching that, you will completely understand when I talk about external influences or just overall market factors, just a changing environment, because there is no two trading days that are alike. And the simple reason is because the news is not the same every day. There are different things that move the market up or down every day. And that's what you got to watch out for. You got to be ahead of the curve on that. Hence why I call it investing, because you're taking a longer term approach. I'm thinking like years down the line. I'm not thinking about the current quarter of a certain company. If I want a quick short term bump, yeah, maybe I'll take that. I've done that in the past. I bet on Apple's earnings quarters. I bet on Netflix. I bet on what else was the most recent one I bet on? Stamps.com. Some people like to bet on, here's another investment strategy. Some people like to bet on earnings. So when you know that earnings are coming up for a certain company and you believe them to release a strong data based on the quarter that expired, make a bet on that. Why not? Such as, I don't want to say it's a given, but during the holiday quarter, right, when they're about to report those numbers, you can generally expect Apple to pull a strong quarter, as they did just recently. They pulled a record quarter. You can expect Amazon to pull a strong quarter. Guess what? They pulled a record quarter too. Who else did it? AMD did it. Another record quarter for them too. See? So you can bet on shorter term things if you like. Like I said, I honestly think if you truly want to accumulate wealth, you gotta take a longer term picture. There are certain things where you can just throw money into and not worry about. And that would be investing. Where if you don't want to be stressed with the everyday, day-to-day ups and downs of it, then throw it into something longer term. Throw it into something that you have faith in. Think about, let's say you're 20 something, right? And you want to do this for retirement's sake, right? So you're 20 something now. Think about what companies are going to be around 40 years from now. Think about how life is now and how you think life will be 40 years from now. If you think, for example, if you think electric is going to be the way to go in terms of vehicles, then maybe put a bet down on electric vehicles. Maybe buy some shares in a manufacturer. Or better yet, if you think Tesla's too high, not that I'm saying buy Tesla, but if you think the share price is too high, guess what? They got to run on batteries, right? They got to run on charging stations, right, throughout the country. Buy the components. Buy the companies that are building charging stations. Buy the battery manufacturers. Buy the developers. You got options. Just because you want to get, take electric vehicle, for example. Just because you want to get into that part of the market, but you think the price is a barrier to entry, find other parts of that, finds other segments in that market, like the components that I just named off. Those are completely viable plays because guess what? The vehicle's not going to run without those components, right? It's again, I'm sorry if I make it sound like common sense because to me this is common sense. It's like I said, maybe it's due to schooling, maybe it's due to culture, or maybe it's just due to experience. But remember what Thanos said. That in the right in the beginning of Infinity War, where you have Thanos and Loki and their exchange on the ship, where they talk about experience. And like I don't remember exactly the line, but Thanos says something like, he pretty much refers to Loki losing. Not necessarily him being a loser, but just Loki's experiences of frequently not being the victor. And what does Loki say? Perfect, classic response. And it's so true. Experience is experience. And what that pretty much means is we can't all win at this, and you can't win all the time. But however, when you do take an L, at least learn from it. Learn why you took an L. Sometimes you can blame it on yourself for taking the L. But if there are external factors that just pop up, like Tesla, you bought Tesla, and tomorrow the price drops like 5% because there's a recall. You couldn't have predicted that. Like you can take the L on that if you want or not. It's really up to you. But like I said, if you're in something for the long haul and you truly believe in it, guess what? You're gonna take some licks here and there, and that's just the name of the game. But don't get too down on yourself. If you have to take an L, just learn. You'll get stronger, but more importantly, you gain experience out of it. And then hopefully you learn a thing or two from it, so that maybe you avoid that pitfall next time. Or maybe you just move on. I'm sorry. I know I make it sound elementary, but it is what it is. You can't, like I said, there's no guarantees in this. You're not guaranteed to make money. But if you stick with it long term, the chances are higher that you'll make money. Completely different from the casino. The longer you sit there, the higher likelihood you're going to lose money. It's about knowing when to pretty much enter and exit. So, I know I rambled a little bit. I hope that kind of helped. And yeah, I've been, not gonna lie guys, I've been blitzed with so many questions about investing over the years. And it really started to it really ramped up with the pandemic, because a lot of people were home and wondering I've posted about it. I posted about the plays I was making. And some of you caught on, and some of you have already started dabbling in it, which is awesome. I wish you all the best. And now some of you are kinds of just riding the bandwagon, just jumping on the wagon with what you've been hearing on Reddit, thinking it's easy money, but it's not easy money, guys. Just be careful. Don't trust everything you read on the internet, and don't trust everything you see on Reddit either. You want to sit there and tell me GameStop's going to 1,000? Like, I felt sad. And I still do. Because that was classic pump and dump. And it's not gonna be the first time, and it's not gonna be the last time. Those that got hurt by it, I'm sorry. I hope you learned a valuable lesson there. It's your money, guys. You should be a little more Don't be so loose with it. Don't trust everything you read on a message board because those guys are playing you. You know, they're over there telling you not to sell, not to sell. Chances are they're doing it for their own financial gain. You know, they might be trying to stick it to the man, but I'll leave with this. You're trying to stick it to hedge fund managers. But guess what? Hedge fund managers are working people. The amount of money they make is really not the point, to me anyway, because I assume they worked for it. I assume they definitely went to school for it. I assume they put in a lot of hours to get to where they're at. I assume they also paid a lot in tuition to get to where they're at. And the fact of the matter is, hedge fund managers get paid on performance. If you're going to hate on a hedge fund manager for making the money he makes or she makes, you're hating on a person that's working and hustling. Plain and simple. The person is a master of the craft and is well educated and well informed. Well, do they have advantages over us? Who am I to say? I know what goes on behind those closed doors at their corporate offices. What I do know is that they do get paid on performance. And their job is to grow those portfolios. Because that's performance-based incentives right there. You know, like, wouldn't you want to do the same? Let's be honest. Don't you want, if you're in it to win it, don't you want to grow it and get a bigger chunk of that? Because guess what? That's your work. If you're putting in the work, you should get compensated for it, right? You know, if you want to take down hedge funds, this is not the way, in my opinion. No offense. You want to think it's the way? Keep on going right ahead. Volatility creates opportunity. That's one of the golden rules in this. Because what ended up happening was, guess what? They were selling positions to cover their losses from the short squeeze. And that created massive opportunity. And I hope some of you guys saw that. Think about what I talked about earlier, about I name dropped a few companies, and if you guys are paying attention, here's the test. I'm not going to repeat it. But I did name drop a couple of companies that posted record quarters, and what happened? How did the market react? They got punished for it. Why? Because the hedge fund managers are covering positions. And volatility creates opportunity. They got punished for it. What does that mean? You post record quarters, you get punished. I don't know about you, but I saw that as a buying opportunity. Just saying. Welcome to this edition of Teddy Talk. I hope it was insightful. I know I rambled. I apologize. I got a little carried away. I don't want to see people get hurt. You know, I'm not on the side of hedge fund managers, but I am on the side of hardworking people that put in an honest day's work. The hustlers, the grinders, the rounders out there. That I'm a fan of. I don't want to see them get hurt. If you truly want to hurt the hedge fund managers, here's an idea. Why don't you educate yourself on how you should invest your money? So that, guess what? The more people that are educated on how to invest their money, what happens? You do it on your own. Then we don't need a hedge fund manager to manage our finances for us and help us grow our portfolios. Why? Because we're doing it ourselves. Look within yourself before you start, point the finger at others. Because you got to grow in here first, guys. One last thing. I came across something very inspirational. They were talking about, I was listening to Kiss 107, I think, LA's premier radio station on Sirius XM. And I think it was a rapper. I forgot what his name was, or maybe it might have been Rock the Bells Radio. He said, "You can't stop greatness. You can only get greater." So remember that, guys. Okay. Every day is an opportunity to be great, and every day is an opportunity to make yesterday an inferior day compared to today. Because guess what? We're always trying to be better. At least that's how I play it. Every day is an opportunity to be better than the previous day. All right? Cheers to the hustlers. And yes, I am doubling tonight because it was Friday night. This is my typical Friday night. I have a slight headache, but you know, have a couple drinks, play some video games, pass out, wake up at I gotta wake up at 6 tomorrow. Yeah, this is not gonna be fun because it's like almost 1 now. But whatever, YOLO, right?